real deal. And so now the theory has it that the price is going to move towards this gray block over here, right? And so the way this gray block over here is, we call it the forecast region, okay? And uh, and the way it's calculated, again, we'd need a whole nother session in technical analysis theory to understand that. Let me actually change my pen color again to something a bit brighter. Is that it takes the initial trend in the market and maps it to the breakout. Although you can see that the initial trend was very, very big. So why isn't the target level down over here? That's because we try to do something a little bit smarter at Autochartist than just map the theory directly onto the chart. So what we do is we look at the overall quality of this pattern, right? And this pattern has some minor issues. It's a little bit kind of a wonky pattern where you can see that it's not very even. It's kind of squashed up towards the end over here, and also there's these spikes. These kind of long moving upward arches, and then these spikes down. And so the quality of the pattern isn't exactly there. Also, primarily, the initial trend of this pattern should have been from up here rather than from down here. So the pattern is not exactly an amazingly formed pattern. And so what we've done is we've taken the visual quality of the pattern and really shrunk the target level down, you know, to match the quality, the visual quality of the pattern, right? So because let's just say we try to identify what a visual cortex would identify, but looking at this, there's a big question as to whether your visual cortex would have identified this as a technical chart pattern because of the quality. And so we scaled down the target. And so again, you would have got this, if you were monitoring Autochartist, you would have got the signal at about 159.30 with a target down to, looks like, what is that, around 156. Okay, let's call it a round number, around 156. And so the way to trade this is obviously to take a short position. I'm not going to go into that right now. I'm sure all of you know how to place a new order and click the sell button. Okay, you know, I'll leave out that part of the presentation. Okay, so now let's look at this example on Euro USD. Real interesting example. Euro USD, head and shoulders. Is it a good head and shoulders? It's not bad. I like the fact that there is a strong sideways movement with a strong breakout. The head is a little small, but it is what it is. Again, same idea. There's a breakout, and the target is down towards that level over here, the gray area level over here. And notice this is on the 4-hourly chart, right? Not the daily chart. But when I click the view button, Autochart has changed my chart to the Euro USD 4-hourly chart. And we can do the same thing with this double top. And the DAX 30, same idea, right? You can click through these. But I think now it's time for me to show you some more sophisticated stuff. Interestingly enough, I don't know why in this presentation I went to one of the most complex, which is chart patterns. Actually, let me go even easier. I'll go to the breakout key levels. I'll show you what those look like. Let's see what those look like. Okay, breakout key levels. Let's look at what that means on Euro USD. So the difference between a key level and a chart pattern is that a chart pattern is made of both support and resistance, right? So there's two psychological levels that it's bouncing off. Key level is what it is. It's an important level, right? It's a key level. And so what that tells us is that the price keeps testing that level, right? Same theory you can see on the Euro USD 4-hourly chart at the moment. It's tested this level of 104 quite a few times in the last couple of days. And now there's been a strong bearish move, right? The euro has lost a lot of ground in the last 4 hours to the dollar, and it's broken through this strong psychological level. I think there's no arguing. Autochartist did a really good job of identifying this pattern. And again, the theory is that it'll go towards this gray block, right? So that's really the difference between between these two studies, the one being a breakout chart pattern and the one being a key level. But I want to introduce you to a slightly more complex topic, which is actually not enabled by, well, actually it is on the key level side. It's enabled by default. So let me talk about that one first and what it actually is. It's what we call an approaching key level. Okay, that was my last bit of caffeine, so I'm ready to go. I'm almost at 100% CPU. If you think I'm high energy now, see me at midday. So let's look at what this looks like. So notice one thing that's different on my chart, on my Autochartist. The previous examples were all either red or green icons. These here, these emerging chart patterns or emerging key levels in this case, they are gray in nature. Let's see what they look like. Okay. So what this is telling us, notice, is that there is no breakout. Let me draw that for you. There is this green level over here, which we identified. So we identified an important level around, looks like 109 or so, 109 and change. The price has started moving towards that line. Looks like a bit of a pullback towards the end over here. But Autochartist is just telling us, hey, there is no breakout yet, right? The price is not broken through. But heads up, there's something going on at around 109 on West Texas oil. Okay. Same thing on Brent. Let's see what's happening on Brent. Okay. Autochartist identified something on Brent at around what is that? Well, I'll call it 110. 110 and change, right? Interestingly enough, so you might ask yourself the question that, hey, Ilan, why didn't Autochartist identify this as an important level, right? Because maybe your visual cortex would have identified that one. It's probably an interesting question. I'm guessing here that the stats have shown that there has been consolidation at this level over here too, again over here, again over here. The resistance became support over here, and again over here. So it looks like, and looks like as well in the past, oh, and over here too. So, you know, initially one might think that the red line is actually the resistance, and it very well could be. And if the price breaks through this level, Autochartist might next identify this 113 level as the next resistance for Brent. But for now, it looks like Autochartist thinks that around the 110 is the resistance for Brent at the moment. The reason I'm spending so much time on this what we call emerging patterns is important to discuss now, because some of you might be thinking, well, Ilan, if chart pattern theory is about identifying these breakouts, right, when this breach of support or resistance happens, why are you talking to us about these emerging patterns? Why should I even know about them? And it really depends on your level of sophistication as a trader, because the more experienced ones among you might be looking at this and saying, okay, this is actually quite interesting, because now instead of being reactive to the market, right? So instead of having to wait for one of these breakout levels to trade, I now have the ability to be to kind of almost preempt the market, right? So if you want to trade by typical chart pattern theory, you can go ahead and set a buy stop order, right? What would that look like? So what does a buy stop order means? Means that we would set a pending order if there's a breakout to go long. Okay, so let's see what that would look like from an actual trading perspective. So you would click buy, you would click Brent, you would obviously start a new order, you would set your volume. I'll actually set my volume to really low. We're not trying to actually trade over here. We're actually just trying to demonstrate what to do. I'm not sure what the stop loss is or the take profit, but I'm not going to go in there, but I'm going to focus on the order side. So we would set a pending order, a buy stop order at around, what did we say, 109, 500, and we would place the order. Am I going? Oh, looks like my trading is disabled, unless I got this completely wrong. Let's just try a big, oh, sorry, my volume was too low. Okay, sorry about that. So let's just try 109.500. There we go. And then what I would do is I would place that order, right? So now if the price hit that level, it would go long. Actually, I think I placed it slightly too close. I would actually delete that order. It was obviously a little bit greater than that, but you get the idea, right? So what it is, instead of having to wait for the breakout, you're now saying, okay, if the price breaks out, don't alert me, don't monitor Autochartist, just get into the market and trade. Now that's if you're a trained trader, right? So if you think that the market is gonna go, if it breaks out through that line, then go long. However, you might be a contrarian trader, right? And I'm not saying which one is better, which one is worse, right? So some of you are trained traders, some of you are mean reversion traders, right? Or let's see the words that they use for mean reversion trader, contrarian trader, swing trader. These are all meaning the same thing. It means that you guys don't trade the long-term trends. You guys are trading these up and down fluctuations. So if you're one of those, you might think, oh, if it hits this 109,500 level, it's going to turn around and go short, which is also okay, right? So what would that look like if you trade it? You would click pending order. Again, you would click pending order. You would click on a sell limit at again, what was that? 109. Let's call it 550 place. And so if the price hits that level, then go short. Okay. So again, it really, really is interesting whether you're a train trader or a swing trader. It caters to both. I'm going to close down that order. So really, those are two ways to trade this. Some of you are really, really crazy Wild West cowboys, and I know what you're going to do. You're going to trade this thing at the spot price up to the resistance level. So some of you might not wait for the breakout or wait for the turnaround. Some of you might say, you know what, actually, I think it's going towards that level again. Let me trade long right now up to that level. Okay, well, the take profit at that level. Okay, so that's, these are I've given you three different ways of trading these emerging patterns or these gray icons. Let me show you now what that looks like in terms of chart patterns. So you have these emerging key levels or approaching key levels, and we have the same thing in terms of chart patterns. Let's look at those. Here we have an absolute fortune of these things, right? And they're named different things, but let's look at the CAC. All right, so this is what the CAC looks like. And now you can see that in this situation, these lines are not straight, they're not horizontal, they are kind of trending, right? And you can see by the name says falling wedge. So we're expecting to see this kind of falling pattern. And so this is an interesting one. Let me show you a couple of highlights. So firstly, this is on the 4-hourly chart. So this has happened over the last few days. The trend has been generally down, and this is no news for you, right? Obviously, I'm sure you know markets have been crashing, global markets have been crashing. The interesting part, though, however, is that over the last day or so, the CAC has rallied a little bit, and now it's trending down again. And I quite enjoy these long-term trends that correspond to the short-term momentum, right? So this is quite an interesting little trade setup. And let's look at if we've got more of these over here on the DAX. Oh, looks pretty much the same. I'm sure Spain is gonna be the same. Yeah, that all looks the same. Let's see what else we've got. Okay, so let's see what gold looks like. Oh, and I see that Sarah is saying, have you traded gold? Okay, Sarah, here's a gold chart for you. All right, so it looks like gold as well, losing ground a little bit, which is quite interesting. You know, gold is normally well, not normally, but shall we say, regarded as a hedge um, against the other assets, the regular equities, but I guess it hasn't been tanking as much. Still going down. Again, rallied a little bit in the last kind of 24 hours or so, and now dropped down. I wouldn't be so quick to write gold off at the moment. You know, I think people are looking for a bit of a hedge in the market. Let's see if that plays out. Anyway, a lot of these things to look at. Let me see if there's something that's going up. Okay, let's look at US dollar Swiss franc. Okay, here is an example where the price is actually going up. Now, you might ask yourself, Ilan, how do we trade this? How do we trade these emerging chart patterns? And the reality is that they are very, very difficult to trade. Okay, how would you trade something like this? You could maybe, if you're a trend trader, say, hey, the price is long-term up and the short-term momentum is up. I'm going to trade long at the current spot price. Some of you might say, well, what I'm going to do is I'm going to set a sell stop order at this level over here. So if the price hits this level, it's going to revert, or a buy stop order up over here. You know, so one has a number of different ways of trading it, and so now it starts getting really complex, especially because of the fact that it's trending. Okay, and for this reason now, for this reason of complexity, you'll notice this is why by default we don't have the emerging chart pattern selected. Okay, that is because it's an acquired taste, and even more so for Fibonacci patterns, which I think I have just enough time to touch on. Okay, and I'm just looking at my clock here. Uh, and so if you guys are very experienced, and you know, and we have another webinar, we can go into how to trade these emerging chart patterns. They are pretty powerful, but in the right hands. Um, you have to watch whether you're contrarian or whether you're kind of trading with the market, or whether you're trading against the prevailing trend and on the short-term momentum. There's lots of different things to think about, which are way beyond the scope of today's presentation, which is supposed to be kind of a general feel of Autochartist. So as I say, these are not part of the default settings of Autochartist. And now I want to get to the most kind of complex setups that we do, and those are the Fibonacci patterns. Okay, and I'll talk about two kind of trade setups of Fibonacci. One is the completed and one of the emerging Fibonacci patterns. Let's actually see if there's any in the market. Oh my goodness gracious. It looks like there's no completed Fibonacci's, only emerging Fibonacci's. And I know that because none of these icons are red or green. They're both just gray. Anyway, I'll do my best to try and describe it. And it is, these are just insane patterns. Okay, there are too many lines. This is too complex. Okay, well, I'll try. I'll say two words about it. I wish I had more. Actually, you know what? Maybe what I'll do is I'll enable M15 and M30. Maybe there's something on the lower time frames. Oh no, nothing much on the lower time frames either. Okay, maybe this one's a little bit bigger. We'll try to talk around this one. Okay, so there are an insane amount of lines, and you can already see by the complexity of this thing as to why we don't have this as a default setting on Autochartist. I'm just wondering about which one I can talk about. Mm. Yeah, let me stick to this yen example over here. So this yen example is telling us that this is a ABCD pattern is in the process of forming. An ADC, and what it's showing us is that an ABCD pattern will only form if the price follows the dotted line and hits this level over here, right? Now, this pattern or this trade setup was identified during these two candles over here. And you can see in the subsequent kind of, looks like 16 hours or more, the price has gone the other way. So I suspect that these patterns are going to drop off from Autochartist very, very soon, probably in the next hour or two, because the price has gone the other way. But the theory is that when this thing came up, if the price continues up to this level over here, then that's going to be the turning point, and the price is then going to come down. And so there's only really one way of trading emerging Fibonacci patterns, and that is to trade sell limit orders, right? I'm going to erase all my drawing objects, and I'm going to show you at what price. So typically, to trade this pattern, you would set um, a, an order, a sell limit order around 132. So if the price is 132, then you would, you'd be in the market for that. Now, I'm a huge skeptic of Fibonacci patterns. I always say it in my webinars. Some of you might be um, uh, might be huge fans, and I guess we all have to respect each other. We all have different styles of trading. My belief is that if you draw enough lines on a chart, one of the lines is going to hit. Uh, so am I a huge Fibonacci fanatic? No, but I also don't call myself an expert. Maybe there's something there, but I don't like a lot of lines on my chart. I like to kind of have a single focus of what I think is going to happen instead of all these different crazy levels.